Hey guys, welcome back to another video for AskACPA.co. In today's video, the question comes from Albert, and Albert asks, I own a construction business that will generate about $200,000 in taxable income this year. I've had a few people recommend the S-Corporation for my LLC. Is this the best structure for my business? Well, thanks so much for the question, Albert. And Albert submitted his question through our website at AskACPA.co. If you have any tax or general business questions, head over to our website and submit your question online. In today's video, we'll be answering the following questions related to S-Corporations. So first, what is an S-Corporation? Next, what is self-employment tax? What are the tax advantages of becoming an S-Corporation? When should you make the S election? What are the differences between an LLC and an S-Corporation? And what are some of the advantages and disadvantages of becoming an S-Corporation? All right, guys, let's jump into it. So an S-Corporation, also known as an S-Corp for short, is an election made by an LLC or a C-Corporation to have your entity conform to the S-Corporation's rules and regulations. An S-Corporation cannot be set up without first having an LLC or an S-Corporation established. S-Corporations are similar to LLCs in that they are flow-through entities, meaning the company does not pay any income tax, but instead the tax is paid by the shareholders of the company. S-Corporations are unique in that they have their own set of rules and regulations. To become an S-Corporation, a qualifying small business must file a Form 2553, an election by the Small Business Corporation, with the IRS electing their business to be treated as an S-Corporation for income tax purposes. S-Corporations have quickly become the entity of choice by small businesses because of their significant savings in self-employment tax. So first-time independent contractors and small businesses may be surprised when they receive their first check and they realize there were no income taxes withheld. Why is this important? Well, since you're considered self-employed for income tax purposes, you're responsible for not only your normal federal and state income taxes, but also an additional 15.3% self-employment tax. This is often overlooked by new entrepreneurs who are not used to being paid directly and can be quite the shock when tax time rolls around. As an employee, the employer is responsible for 1/2 of the employee's Social Security and Medicare taxes, which is 7.65%. But as self-employed individual, you're responsible for both halves of these taxes. So what exactly is self-employment tax? Well, self-employment tax is made up of two parts. It's 12.4% of Social Security for the first $147,000 of income for tax year 2022, and 2.9% of Medicare tax on all of your income, for a total of 15.3%. So as you can see, self-employment tax is a significant burden for business owners, which is why S-Corporations are quickly become so popular, because S-Corporations minimize the self-employment tax by making the owners and operators of a business W-2 employees. Self-employment taxes are paid on the wages in which the owners receive, and the additional distributions are not subject to that additional self-employment tax. The main advantages of the S-Corporation status is that this is the savings on self-employment tax. Owners of the S-Corporation are required to pay themselves a salary which is considered reasonable compensation by the IRS standards, but any income in excess of those wages is not subject to self-employment tax. Let's take a look at an example using Albert's circumstances. So Albert has net income of $200,000. With a standard LLC, the full $200,000 would be subject to self-employment tax. So here's how those self-employment taxes break down. So first, you're going to pay Social Security tax on the first $147,000 of net income. So that's 12.4%, which equals about $18,228 of taxes. Next, you're going to pay Medicare taxes on all the full $200,000 of net income, which is 2.9%. That's an additional $5,800 in taxes. So his total self-employment tax is going to be $24,028. So this federal income tax, let's just assume at 15% tax rate, it's going to be an additional $30,000. So his total tax is going to be $54,028. So Albert would pay $24,028 in self-employment tax, plus his federal and state income taxes of another $30,000, assuming a 15% tax rate. So that's $54,000 in taxes, which is about 27% effective tax rate. Now let's take a look at the numbers with an S-Corporation, and assuming Albert pays himself $40,000 a year in wages. So that $40,000 in wages is still going to be subject to Social Security and Medicare. So Social Security is going to 12.4%. It's going to be about $4,960. His Medicare at 2.9% is going to be another $1,160. So his total self-employment tax on the $40,000 of wages that he pays himself is going to be $6,120. Now he's still going to have to pay federal income tax on that money. So the full $200,000 is going to be subject to the same 15% federal tax, which is an additional $30,000 in tax. So his total tax is going to be $36,120 using the S-Corporation status. Now that's a tax savings of $17,908 by making the S election. So as you can see from this example, Albert only paid himself self-employment tax on the wages of $40,000. The $160,000 of income in excess of his salary was not subject to that additional self-employment tax. Of course, with this tax savings comes some additional complexities. So paying wages and running payroll can be complicated, and it's recommended that you hire a payroll company to process your payroll to ensure that you're in compliance with all the payroll tax filings, which can be quite complicated. Additionally, when you elect S-Corporation status, you're required to file a separate tax return for the business, which is a Form 1120-S. So as you can see, there's some additional complexities to the S-Corporation status, but the tax savings can be very significant. Since there are some additional expenses in operating an S-Corporation, it's recommended that you wait until your business has a net profit of at least $50,000 of income before making the S election. Hiring a payroll tax company and processing your payroll can be expensive. It can cost anywhere from $500 to $1,000 a year, and having a CPA prepare your business taxes can also cost around $1,000 to $2,000 a year, depending on the complexity. So with these added expenses, it's important to make sure that your tax savings are large enough to offset the additional expenses. Although LLCs and S-Corporations are very similar, there are a few key differences that everyone considering making the changes should be aware of. So first, S-Corporations can only be owned by allowable shareholders. So C-Corporations, LLCs, partnerships, non-resident aliens cannot have an ownership in an S-Corporation. Next, there's a separate tax filing. So S-Corporations have to file a separate tax return annually, the Form 1120-S. Single-member LLCs are treated as disregarded entities for tax purposes, and they're not required to file a separate tax return from their owner. Number 3, S-Corporations are limited to 100 shareholders. So if you have a lot of shareholders, then maybe the S-Corporation status is not for you. Next, S-Corporations must be a domestic company and operate within the United States. Number 5, S-Corporations can only have one class of stock. Number 6, all income and deductions and distributions inside of an S-Corporation must be made pro rata to the owners based on ownership percentage. Now this is different from an LLC, which can be allocated based on who brings in the revenue or based on different circumstances, but it does not have to be pro rata based on ownership percentage. So keep that in mind. That's a big difference between an LLC and an S-Corporation. And finally, number 7, S-Corporations are not allowed to have more than 25% of their revenue from passive activity. So this would include rental real estate. As you can see, most of these differences will likely not impact your operating business, but you should still be aware of these differences before making the S election. The benefits of an S-Corporation often outweigh the perceived disadvantages. The benefits of the S-Corporation are often maximized by closely held operating companies that are highly profitable. Here are some of the most common advantages and disadvantages of the S-Corporation status. So first, the advantages. So flow through. So S-Corporations do not pay tax at the entity level, but instead the income is passed through to the shareholders who pay the income tax at the individual level. The flow through classification of these entities often avoid the double taxation faced by C corporations who pay tax at the entity level and then again at the individual level through dividends. Next, asset protection. So in your business as an S-Corporation, you have a certain legal protections for your personal assets, which are separated by the assets of the business. Shareholders are typically not personally liable for the company's debts and liabilities, and creditors are unable to seize the personal assets of the shareholders. Next, transfer of ownership. So ownership interest in an S-Corporation can easily be transferred to new owners or other current owners without causing significant accounting and taxation issues. Now let's go over some of the disadvantages of making the S election and becoming an S-Corporation. So first, restriction on ownership. So one of the limitations of S-Corporations is who can be a shareholder of that company. So S-Corporations cannot be owned by foreign shareholders, certain trusts, or other corporate entities. Additionally, S-Corporations are limited to 100 shareholders and can only have one class of stock. This is typically not an issue for closely held businesses, but for larger companies or scaling software businesses, this may not be the right entity structure for you. One of the next disadvantages is reasonable compensation. So one of the largest benefits of S-Corporations is the flexibility to categorize a portion of your taxable income to wages and another portion to distributions. The IRS has made it clear that owners working in the business must pay themselves a reasonable compensation, but that leaves it up to the taxpayer's discretion to determine what is reasonable. If the owner is unreasonable in their allocation of wages, the IRS may determine that the distributions should also be classified as wages and apply penalties and interest to back taxes owed. The third potential disadvantage is proportional allocation of income. So income and expenses and distributions from an S-Corporation are required to be made in proportion to the shareholders' equity in the company. Unlike an LLC, where allocations can be made based on the agreed upon provisions of the operating agreement, S-Corporations must be made evenly. Wages are allowed to be made disproportionately based on job duties, titles, and hours worked, but the income, expense, and distributions must be made based on ownership's percentage in the company. There are many factors that need to be reviewed and considered before you can determine for sure if the S-Corporation status is right for your business. I recommend consulting with your tax professionals and legal team to determine if the S-Corporation is right for you. Hey guys, I hope you enjoyed this video. If you found this helpful at all, please consider subscribing to the channel and hit that like button down below, and we'll catch you in the next video. Take care, guys.